Welcome to my channel. I think I just pressed some wrong button and we end up closing the analysis. Not too bad. This is the monthly chart. We were discussing that the mean threshold is the what we can see as less than for bullishness in dollar, and we actually would like to see that. This is the monthly high time frame monthly analysis, and if we lose this as in term of with this drop and we lose this on closing basis, we will be looking at these swing low and lower prices. For now, I'm looking at this pullback as being a pullback to bounce from this and continue go higher. We did some analysis already. We walked past that. If this is, we start with the news. We mentioned the attempt of assassinating the U.S. President, and that fear that is in mainland USA can be used to manipulate the market. We have seen that Monday being Fed chair speech. It's a red folder by 12 or 1 o'clock. We have seen also there is an FOMC news somewhere here on Wednesday. Those two are the news that you can be very careful for. The other, we like the volatility that they will bring to the market, for that is likely influence of the market maker. Before I continue, I'm greeting you from Suriname. I am the algorithm that I am programming. Doing these analysis, it is just I'm programming my mind to think and to reason like the algorithm. I am Algo, greeting you from Suriname, and I like you to pay attention to this disclaimer. Whatever content I am posting is just for entertainment purpose. I hope you are joining and you are experiencing some entertainments by these tape reading and these experiences and these videos. So we have covered the dollar index, and from the weekly basis, this is the monthly. From the weekly basis, it's good to do it from the chart. From the weekly basis, I'm just expecting 1 week. I'm expecting the market to continue. This is what I will be looking from here. I'm expecting price to continue to drop to this bullish order block and use it and turn to give us on dollar index risk off. For now, it is risk on. Risk on, and the price delivery continuing is telling us, showing us that we have a last stand. This price may come and wick to it and then start going higher. This is a daily range, so the buy side and sell side is taken first. Buy side, we trade into discount and start and have been working in premium. Now price is dropping to discount again. If they take this swing low, which is my last stand from weekly basis, I can expect the market to go higher to this. I want to see on the daily chart or the 4-hour chart, see how they will trade on this monthly main threshold. For that is going to be for me a deciding factor. There is some low here, price may just drop into this consequential encouragement. Let me mark it. It's a monthly chart. We use the color green whenever we have some annotation on my chart. It is monthly green or although green is monthly annotations. So price may want to drop to this busy, and then from here start going higher, giving us risk on. And the daily chart, you see every annotation on my daily chart. If you see any blue color, then you have my annotation daily chart annotation. Something went wrong with the first audio, that is why I need to hurry, for I want to catch the opening on the Nasdaq. This is prior to reach intermarket relation. This is the daily chart. We are looking at price. There is a CB. Price may open and want to rally to this candle. It is consequential encouragement of a weekly candle, so price may want to go there. For now, I'm looking at price can open and continue to drop to this level, and practically these are the level that we want them to respect if as they go down. So this drop on the dollar index is the result of it is that we will see the market drop on the on this level is giving us room to, let's see, to expect price to some of this. On those that trading forex, Euro USD should see bullish rally. This is it. Yes, Euro USD should see bullish rally, and I will go very quick to Euro USD. Actually, every pair with USD in it, we expect to see rally, which is what we have here. Let's see this daily chart. We won't stay long here. I don't trade the euro, but I'm just doing the checkup. If dollar continue going higher, we may see price want to reach for this high, which has not been engaged yet. This high, which is on the daily chart, we have it as swing high, swing high. That's it, liquidity. I may use this order block and busy, which is a very validated order block. You want to see that in an order block, a busy coupled with a order busy. So price may want to open. If we retrace a bit in the dollar, we can see price drop to this, respecting this this down close candle, and trade just into this busy to continue to go on the upside. That's meaning we are now risk off. There are some liquidity above these highs. You can draw. There is some inefficiency there, and ultimately that target can be aimed to if we continue to go to the main threshold with dollar index. On the discount side, we are seeing this. These are relative equal lows. There is also relative equal lows there. Relative equal low, sell side liquidity, which there is some. We are looking at some inefficiency here. That might be the forming of market maker sell model, being this is meaning this is the base. Expand, return to base, expand from first, and then we might see the turn to have this market maker sell model profile, and then the aim will be here. As how it looked for now, these are the thing that we will be looking for. The fiber from the daily chart, I don't trade the fiber nor the GBP. It is now risk GB. It is now risk on, risk off. I had a clear picture of what it is. It is now risk on, but mildly, because I'm focusing on the Euro USD. I'm focusing on the drop in dollar have give this rally, this strong rally, taking buy side, and then there is some inefficiency that is here somewhere here. If they continue to go higher, the British pound will go first for this inefficiency, and then if they will turn, then it will turn. It seems to me like they have some. We are developing a market maker model. Like this is the base, price rally, return, left this high. This is the base, left the base, consolidate, left, and if we trade with the dollar down, continue the dollar down, we might trade to engage that buy side liquidity, or just fall short in this inefficiency. And if we fall short in this inefficiency and the dollar start going higher, we may have the sell side delivery of this potential market maker sell model. I don't trade it, I just use this to find risk on, risk off. And for now, I'm going into the indices with that in my mind, risk on situation, and that is how I will go into the indices. I'm going now. We could check gold. For gold is the qualifier for gold is the qualifier of the dollar index. So I want to look at what the gold market is doing before we go further. Gold is showing us that gold is going on, have been going higher, and they have an inverse relationship dollar index. It is a qualifier. For me, gold is not yet coming out of this large range. Gold is still in this large range, even though it has been trading and make balance, actually trade this how you call this imbalance, this balance price range. It have not respected. I will get them out of the chart. It's this balance ratio. I was expecting price on the gold to respect it. It have not done that. We are seeing that here we have some premium objective. Those that are going to watch gold, price may open, drop to make efficient this inefficiency, drop into this mean, and then continue to go high. If the qualifier of US dollar continue to go higher, we will be seeing we will be looking at the dollar to go lower, because gold does have some influence on the dollar. Intramark relationship analysis. And if they engage this buy side liquidity, which is above this marketplace, and start dropping, I will be looking at this objective, and also this BC. this busy, I will be hunting price to trade in to see this busy. Here I can have this. These are practically relative equal lows. Even this one you can calculate that they will come to engage it. I can relative equal low, sell side liquidity is below that to form mid, right, white, it is swing high, buy side liquidity. Price is going up only for this reason, either to reprice into an inefficiency or to trade to clear a to create a liquidity that is above marketplace. We are not talking about IPTA ranges now, but I could. But for now, I want to go to give myself one whole quarter to work on the Nasdaq. I want to look at analyzing the Nasdaq. This is pre-market. See the opening from the Nasdaq. Gold has been covered. Crude oil, I don't have to do that. I will do NQ. The Nasdaq. The Nasdaq has seen some powerful rally. I want to begin because we see decline in the gold. We have seen decline in the gold, and so we have seen a rally in the Nasdaq. The Nasdaq have, like the S&P, make higher highs, continue to make higher highs, and I want to say this is these 3 or 4 candles. I'm using them as actually one order block, and price has changed the states of delivery right there. This is where this bullish order block start. The opening price of this order block, we see there we have a busy on the weekly candle. And where is price likely to draw to? For now, the market is showing that the dollar is going down, and we are seeing the market making higher highs. We are taking in account the election of the election, and that's why the influence of the election of the United States president, and that's why it is very good to pay attention to what happened during this weekend, because there was an assassination attempt, and that attempt will have influence in the market. I think they will use it as mean of fear to this 1 week into 1, 2, 3 minus 3 week ago. 3 week ago high is a swing high. I want to have that on my chart, and I'm looking at this down close candle too. But as long as I see the dollar continue to go down, I will be focusing on buy side opportunities. So for me, I'm holding a strong little bullish bias, nimble because of the direction of the US dollar. This order block can be marked also. So whenever we close the market, I think earlier the market early, we may drop to this, make this inefficient efficient, and rally continue to rally. And if I see the dollar go up, then I will start looking for this sell side objective. Before I take some, it is the Nasdaq, the mini. That's the analysis. Normally, till I use this space to write and to put my observation, in backtesting and tape reading. That is what I mainly do. For now, I'm doing it via the audio, and it is easy for me. And it is the Nasdaq, the weekly. We want to catch the market open, that is in about 15 minutes. The daily chart, you're seeing the daily chart showing that we have dropped I'm looking at this formation and trying to find some base or return into base. Those that know what I'm looking at, but it's not yet clear. What I will do is that I'm seeing that price have strong drop toward the sell side. This imbalance has been traded through and have trade past it, and maybe will be used as inversion fair value gap. I won't not have it on my chart. For me, they have balance, make it already balanced. They balance this with these drop. I'm looking for this CB, this busy buy side imbalance is green candle. Blue, I need blue because it is a daily chart annotation. Chart annotation, there is some order block here. Also there you have a busy, which is really what validate a porous order block institutional wise. Busy, it is one candle I can have a mark like this. There is blue, I need blue because we are annotating on the daily chart the price. If we see the dollar continue to go up, if the dollar turn to go up, these are the objectives I will be looking at. On the sell side, this swing high, this relative equal low, these are the premium object, discount object I will be looking at. For now, this is the daily lay of the land. Important, if the dollar continue to go down, which is really a deciding factor, especially when we see this, what happened in US mainland. These graded this wick, I will grade it. I grade this wick because wicks are being the consequential of this wick, Friday wick. I want to see what price will do there, and I give him all the I think this is the upper side, it's 75%, and I will have him also copy. If we decide if the dollar continue to go down, I will be looking at this wick, the graded level of this wick, and see what they will, how they will trade to it. For this is also a qualified, already a qualified order block, bearish order block. So I will be looking at how they will handle that. Where is it? If we rally with the dollar index doesn't, the indice does not react to market with the dollar index. It might continue to go lower a while, or just continue to go lower. It is just an indication. These are sell side objectives, which I will be looking if we continue to go to the sell side. We'll go to that was the daily chart, and I always I'm relating that the 4 hour, I'm not making any annotation on the 4 hour because of the if it is clear for me where we are going from the daily chart, I am not making annotation on the 4 hour, and clear for me is that I think we are going to reprice to this the sell side. This shift, this drop have not really have taken the swing low, so there is a shift in market structure. We trade into this large busy this large SEBI, can annotate it now, this large SEBI, we trade into it, and now we start dropping to the sell side. What they will do at this order block and how they will use this will tell us further how to trade. I'm not making annotation of it, for it is clear for me that what is happening, so that's why I don't make annotation from the 4-hour time frame. Also, our trading intraday, the 4-hour is really where you need to be for your bias and your bias determination. It is clear for us. This is the 60-minute chart. The 60-minute chart have shown us this drop, which is when I saw this drop is on Thursday. This rally is caused by the dollar index drop. So there is a shift in market structure. A swing low has been taken from the 60-minute. This swing low have left a busy. If we go into it on the daily, on the 60-minute, I will see that as a entrance for the, here you have the swing high, buy side liquidity, and then there is some discount objective. That's why I think that we are going for that sell side, but it all depends how we trade with the US dollar. I will be very nimble this busy. I want to see price go lower because of the seasonal tendency. There is some black swan event in US mainland that is going to be an influence to price delivery. So these are the objective. There is a small taking of sell side, not convincing enough. This wick, I don't expect it to respect this wick. So I'm looking at this high as D range, and we have traded this level there and there. We have come from the premium side and now going to the sell side. We might continue to rally into this SEBI, open, rally into the SEBI to then drop lower. It is a narrative. That is what I will be having in my mind as I am hunting the daily, the chart delivery tomorrow. These are the objectives that I will be having in mind. This low. Low being the low that defined for me the range showing low sell side liquidity. Taking that this is the range, the dealing range. There is some liquidity that have not been taken with conviction. I'm expecting price to drop lower, but it will all depend on how we trade on the US dollar. There is some SEBI space left right here above marketplace. So price may want to spike into it. We don't know SEBI. On premium side, it is clear where we are going, and going to the 15-minute chart. Really, this how you call it? This SEBI is plain. it is plain for us where we might see price going to. We keep it. I won't put the 15-minute annotation, but there is right inside here a SIBI. It is low, high, higher high. This is a breaker. This whole candle range is a breaker. Price have traded through that breaker, and I'm expecting price to respect this breaker. So if I will take a trade, I will use this like this. Give it a 15-minute breaker annotation. This is a bearish breaker annotation, and then I will be hunting for price to trade, enter into the SIBI, trade into the breaker, midpoint equilibrium, and then start going lower. That is if the dollar rally. That is what I will be expecting, and it is clear. If we lose the breaker, then the buy side, I will be following that. (60-minute, 15-minute). I normally hunt on the 15-minute. I want to see there the sell side taken. So 15-minute, and the 5-minute is where I really active looking for certain things to happen. We have now seen buy side taken here, sell side also taken. Actually, we are in a new dealing range, and price, if they will go down, they will not yet go down until they reprice above discount. And I'm looking for price to rise into discount, giving the feeling that we're going down. And with the dollar index going down, this is possible to happen. Price can use that to go to the premium. There are some pockets here, some SIBI to be make efficient, and price may use it to go into that and then start dropping lower. So that is the information I have from the 15-minute chart. And then we have practically 1 minute left to watch the 1 minute chart. I don't really go to the 3-minute chart. The 1 minute chart is where I first make this Friday closing price. As normally I set it at settlement, but it is now I'm making annotation. I will just say current new week opening gap. It is Friday. Friday was Friday the 12th. Friday 12 or 7 closing price, and depending on how we open will tell me if this is low or high. I won't annotate the time frame, the kill zone yet. I just want to see where we will open, if it is discount or a premium. In about 8 seconds we'll have the opening, then we will we'll set this the market open already. Let's see. I see some delay. Why that delay? I'm seeing that delay. Let's see on the ESU. Indeed, I'm using paper trading, so maybe that is why we see some delay. But we are set. I'm using paper trading with paper trading I'm covering myself and that is why we are seeing this delay. I don't know how many minute delay. The data is delayed. I don't know why they delayed it. Okay, we wait NQU 23. We wait, and when we see it, when the data come in, we will witness and we will mark the how you call it, the low or the high. Remember this day, what we are doing, we are not trying to take any trade before the market open at Monday. So all we are here is to set the new week, current new week opening gap, and watch for a half an hour. Watch for a half an hour. Let me try to get this data done. I will. This is where we are in our practice. Okay, close that. We wait on the delayed data from the paper trading. Remember, we have seen some. We are expecting some thing. In the meanwhile, I don't like it. I like to see the opening jumping up when it is green. You'll see the opening come right. In the meantime, we are looking at a PM session. That is the PM session close Friday. The PM session. PM session. And then, no, this is a PM session. I mark it at right there. All I want to do from the PM session is to mark the highest high and the low from the PM session. For those who are going to be important for my trading this coming week, I want to see with how they will rate these this low, like this Friday PM session. I will mark it going forward, and this is the 1 minute chart. I will do that with green. And that is Friday PM session. Low under your sell side liquidity. And then you have this is Friday. I want to see what this annotation is. A SEBI low, so I can mark it SEBI high. We wait until we define the opening range gap, and then we close the recording. It is Friday the 12th of 7 PM session. High. So this range is going to be important for us going forward when we are going to trade this coming week, which will start the 15-minute chart. If you go to the 15-minute chart, and that is where we start annotating of breaking the day. We'll have Sunday, the mark will be open. Pardon me, and then we will Sunday 6:8. You will see the opening price. We'll mark this is, and Sunday until midnight right here. Just midnight. Then we have the London session on a Monday. I don't recommend you to engage the London session, but if you will and want to, You need to understand the analysis that we have covered from the high time frame, what we are expecting based on the dollar index, but also based on what the market is giving us. So you need to understand it before you engage this London, this time frame, this kill zone London sessions. Silver bullet is expecting. It's on the Monday. We are only here to make notation of the close of London session. For those that are trading forex, this is New York Open till 10 o'clock is very important. That is where the setup swarms. For those that are trading indices, we start hunting at 8:30. It is where news will come in, and we have news on 8:30, and we need to take in consideration what happened in US mainland, for it can be a very volatile hour. Normally what I do on the Monday, I don't engage the market before 12 o'clock or before the equity opening. So just before the silver bullet time, I don't have equity open. I want to allow, and I'm allowing the market maker to use sentiment and to set the course. Most of the time I leave the AM session clear, and then after that I come and engage after lunch hour. Then I pretty have some idea where they are taking us in lunch hour, and then I will mark also after lunch hour we have the PM sessions. Then the PM session will give us the PM silver bullet also, where we hunt that. It does not have to appear. It will be in one of the asset classes. It does not have to be PM session. The PM silver bullet. And then we have the final. I'm actually doing some study on the final trading hour. I'm really focusing on how to use that volatility. Not every day, but I'm focusing on that now in these days. The final trading hour, and after that we close shop for Monday. And this Monday is a trading date based on the calendar, but one is one is with very caution, take in consideration close shop, what happened in US mainland, make notation, check what they will do with the information of what happened. I don't think we have already seen the opening. It's a little bit boring. Normally I will have that open, jumping right into the chart, but there is a delay. And why that delay? It might be that they already are looking at how to manipulate the data. They have price open actually in premium, meaning it is a premium price opening. This is all we do, so we are not in a hurry neither to Sunday opening happen on premium Sunday opening. And we open today is Sunday the 14th of July. It is the opening price. That is all we want to do. And price have now repriced to the consequential and left something open. That's not really what we are here to do. all we are here to do is to make notation that we open at premium. This is a consequential encouragement of the current new week opening gap. Have to just watch price project. You don't have to be in the market right now. Consequential encouragement, current new week opening gap, consequential encouragement. This is the high, for we open above where we have closing price high, and this is the closing price low. So we open in discount. So that is what we are doing. That is what we have been waiting for. We see the opening, and we can take a picture and have it there. What you can study is, remember that this is the Friday PM session low. So you want to look at how, if price will engage that first, or take this before the market open, then start rallying and use this order, this 15-minute breaker. There are something there price can go and get. Maybe price will continue to rally, but like the analysis show, we might be having lower prices. We already seen what we wanted to see. I will just do one more thing. That is, I go on the 5-minute chart. This is where you can see clearly what we have been talking about. But we don't engage the market yet. We want to see how they open and continue to rally. I want to see them respect this breaker, this bearish breaker, trade and make, if it is possible, to leave this pocket open, but trade to the midpoint of this 60-minute CB, and then start collapsing or going down. For now, we don't do nothing. We just engage till after this, till after equity opening, so the market can be gyrating and doing its things, creating lower high, creating higher highs. That is not really what we are concerned to. We wait for a specific time for this price, time and price theory, where we will be looking for price to reach certain level. So we can go to the EU. The data have just been released. This has also opened on the premium. We can make notation of it. This is where we close on the Friday. It is current new week opening gap. Friday 12/7 closing price. Now we know it is low. Then we just open it. It is the Sunday opening price. Sunday opening price 14th of 7. Okay. This gap does have influence in price delivery through the whole week. That is why we want to monitor, we want to check what it is and how the market is using it. For those that have no data on the Sunday opening, you just use the Monday opening price for this gap, and it won't be too different. Current, consequently current. Yes, it is all I want to do, making this annotation and start looking at 5-minute chart. What may we see a pocket here? This is buy side has been taken. We see buy side first taken, sell side taken, a drop. Price can rally into. There is a pocket here. We won't bother because we will be looking at the Nasdaq this week. When the market open tomorrow, I want to check the equity open. I want to look at either the strength, relative strength, and then I will further do some analysis on this time frame. For now, 15-minute is also showing us that there is a big pocket of thing here. We have this high, low, higher high. This breaker, we are looking at how price will trade on it, and it seems that it have already been respecting it. So the sell side may be the where price will be going. We don't bother taking trades. You can use this annotation tomorrow when the market open. It's great. Then yes, we have this one, and then we want to look at the YMU 2024. And that is we use it just as a barometer to see if they are in symmetry, and if they are in symmetry or we have some Kraken correlation. This is what we use. We have half the day. I don't really mark this Dow Jones. Those that are using mini, the same thing has happened there. Only here you risk less money than on the mini, and those mini NQU. Here you have risk less. You will risk less money, but the same price projection. There is some characteristic that whenever you are at the course, you will be knowing about how it moves. The dollar index jumped higher. Remember, we were looking at the dollar index to trade lower at the beginning of the analysis. This rally and jumped high, leaving this gap. I like to have this gap on my chart. In the 50, I want to have it under 1 minute. This gap on the chart is very significant, for we want to see what the market will do with this gap. This gap. We want at the beginning of the analysis. One second. This one. Then we have that control. Why this? Okay. Just become we want to see what this will mean for overall price delivery. From the beginning of the analysis, we were looking at price. First of all, we want to see price drop lower because it is very close. 15-minute, 60-minute. It is very close, and there are some relative equal lows down here. But if price start going higher, we will see risk off scenario, and that means the other asset class forex will go lower, which is really what we want to, but the market is too close here for them not to go for this these relative equal lows and sell side. It is the daily chart. I'm expecting to see price rally to this busy, this consequential encouragement of this weekly on the daily chart is going to be influential also. This long tail, I don't really watch it too much, but I'm watching this. I want to see price MK. If it reaches, we see enough downside on the other asset classes, then we can see risk on. I'm actually expecting risk off to be the case with dollar index. That's why I'm looking for price to go down first and then continue going up. I want to say goodbye. Thank you for your attention, and your analysis is just, that is one of my last statement, is just an approach of the market. You have analyzed the market. It is not everything. You try to filter a one side, try to have a bias, try to have a direction, something in mind when you are hunting liquidity, and together with the news, which now have become not only the news from the forex factory, but the news with what happened on U.S. mainland today. You need to be careful on Monday and how you trade and how they will use that fear, that threat on the whole week. So together with that, you can watch your kill zone. I won't recommend nobody. That's why I have this disclaimer, and I'm asking you to pay attention, for I am greeting you from Suriname. And this is Algo, my friend, my own algorithm that I am programming with these. That's why it is for my entertainment purpose and for my backtesting purpose. I'm doing this and programming algo so that I can understand and grow more in the institutional order flow. Thank you for your attention. Thank you very much. Thank you very much that you want to be here. And great trading week.